Well, good evening, ladies and gentlemen, and thank you for being with me this evening. And it's good morning to our friends on the east coast of Australia, as we are now all back on the same time, which is a change. Mickey D, thank you, my mate. Screen is up, I got that, thank you, and you can hear me well. And we're delighted to have Terry with us today. We don't get to see Terry terribly often at these webinars. He's very busy. It's always a delight to see him and everyone else as well. Well, what a thing. Easter 2023, a third of the year is gone, and life keeps rolling on, doesn't it? Now, I know a whole lot of you are traveling, and you will get to see this webinar later today, and I'm delighted to have you either present or watching it at your leisure after the recording is posted, which Terry will probably do tomorrow morning. So it's important stuff. All of these webinars are information I'm trying to get across to you, part of the teaching process, and hopefully making you more aware of the joy of markets and what they do. You know, it's a big deal. It's the whole world. It's heaven and earth, and it all comes down to the pinpoint accuracy of the Danielcode numbers. So let's see what we've got here. Our numbers are down today, which I understand because a whole lot of people travel over the holiday. But it's great to have you here, all of you. Albert's with us. Of course, he's a tutorial guy, says George. Many Georges. Geek from North Carolina is with us. The world's most dedicated golfer, I would say. He's a great man for the golf. Greg Palladini is with us. Greg, wonderful to have you here with us. Of course, Greg's been so incredibly generous by posting in forum his experience of doing his second Danielcode tutorial. If you haven't done that already, have a look at forum and go to the post that's called Danielcode Trading Tutorial or something similar. And Greg Palladini's a top trader. He's a wealth fund manager in California. And he was kind enough to not only allow us to use his name, but also to post about his total experience of doing his Danielcode tutorial. So that's great. Gary's with us, just arrived. Good to have you with us. Of course, mate, many of you. Janet's with us. Janet has been a Danielcode member since 2011, and she's still here with us. Great to have you, Janet. Mark L, of course, a guy who, I don't know if he'd ever got around to trading. Mark did a Danielcode tutorial years ago, and he's a very, very good trader. And he's been trying to become a full-time trader for years, but he's such an efficient manager that he keeps getting offered wonderful jobs, which of course you can't turn down. And he's with us now. Mickey D, of course, he's a great supporter. Wonderful. Oh, Mark says he hopes to be started trading on June the 15th. Good on you, mate. The next job will be coming around the corner on Tuesday. Right. Mickey D, who's a great trader, great friend. I've known Mick's family for 30 years or so. Wonderful people. And Mick's a really good thinker. He's a very deep thinker about trading markets, which is a wonderful thing. Miles is with us, of course. Ned's with us. A couple of Neds are with us. And see who I've got here. I've got more than I thought today. Well done, everyone. Peter Mack, who's not a day trader, is with us. Rolf from Melbourne. Rolf, good to have you with us, my friend. Sam's with us. Sean down in Adelaide's with us. And Stuart's with us. Of course, Terry, I've said. And Vicky. Vicky's with us, one of the few lady members. We have two today. We have Janet and Vicky, so we're doing well. We don't have many lady members, and we'd like to have a whole lot more. And it's kind of interesting, isn't it, that in Japan, where Forex is pretty close to a religion, the dominant number of traders are women, huge lady traders in Japan, but not so much in the States and not so much here. Anyway, it's great to have everyone with you, and today we're going to talk a little bit about the one more thing. And I can't begin to emphasize how important this is. Some of you have heard me go on about it, and it's a phenomenon. Yeah, there's no other way of putting it. And during the week, I was having a chat with some guys from Tech Invest who are interested in learning about the Danielcode. And these are guys who are both, these are the co-founders, they're both seasoned traders, very, very keen traders, and designed all sorts of trading systems and what have you. And they simply can't believe how accurate the Danielcode is with its target recognition. And that, I guess, is the big story and the difference, that these Danielcode ratios that we produce for you in members' charts, they're not fibs, they're not old highs and old lows, they're nothing you've ever heard of that's in a conventional sense of trading. But they are what controls all markets. And the fact that they do is, honestly, it's a miracle all on its own. Anyway, let's move on. We've got a whole lot to talk about today. And as I say, for those of you who are with us live today, wonderful to have you, and I hope you're going to enjoy this webinar. And of course, if you have friends or people you know who are interested in trading, please share it with them. Please send them to the website and tell them they're welcome to look at this webinar or any other webinar, of which we have, I don't know, well over 100 now, Terry. And Terry's reorganized all of the banners for the Danielcode webinars, which we do basically twice a month. And the knowledge and information there is a lifetime of learning. You should do well to see them all, as many as you can get through. So happy Easter is the message. And I thank you, Terry, for this banner, as well as your banner for the webinar. You're a very fine graphic artist, and this is lovely. Happy Easter indeed. Gosh, it scares you how quickly the year rolls around, doesn't it? Good Friday today, Easter Monday after the weekend. But tomorrow, of course, Friday is a market holiday. Apparently, it's not a public holiday in the States, but it is here and in many other countries as well. And its markets just sort of slow-mo into it. But particularly good today, because I'm going to show you that even when markets are slow, and you know, a whole lot of people take Thursday off or half day off and start their trip for Easter, which makes the markets very thin and low on volume and very slow. And most people will tell you that will affect the accuracy of support and resistance. Well, that's because support and resistance, most people know, it is not very accurate at all. You know, a 50-day moving average, 100-day moving average, 200-day moving average, so what? They're not accurate. Markets just work their way down to them and through them. And about the only thing you could say that's truthful about that form of support and resistance is that markets rally up to resistance and go down to support. But none of that is accurate. But what you're going to see today is deadly accurate, and it's always deadly accurate. And that is the amazing thing about it. So I wanted to talk today about the one more thing and some trading technique. And when I opened a file, I found this document here. And this is actually a slide from a webinar we did back in October 2022. And it talks very much about what we're talking about today. It says the prerequisite for any market turn, whether small or big, is DC target recognition. All markets turn at and only at the Danielcode ratios. By using these amazing support and resistance ratios, your trading will be a deal better. And the point is that these Danielcode numbers and ratios are a whole lot more than support and resistance. They have the capacity to create target recognition, which is a concept completely unique to the Danielcode, and you'll see as we go through how important it is. And of course, this is just to remind us as well that it's now 6 months since the low. I said in the second paragraph, a close above 35.77 will confirm a key reversal bar on the 6-day chart. And that will probably be the low for a while, and it has proven to be the low for the last 6 months. So we'll see what's all to come. So basically, this is the S&P E-mini. Basically, markets have just got really lazy, is how I'd put it. There's very, very little volatility in equities, and this was the chart that showed you the 6-day low on equities. But basically, this market has come off 50% from the high to the COVID flash crash low back in 2020. And it's now rallied 50% from that low. And they're lazy numbers. 50 is a valid Danielcode number and half, and it's also the most common Danielcode number. And that's because when markets are really not sure what they're doing, that's where they'll gravitate to. And that's exactly what's happened with this market. And it's happened over a long period of time. And we've got such strong time cycles expiring at the October 2022 low that I'm loath to say any more other than that we had time and price at that point, and therefore we got a turn. But it doesn't seem to me a very satisfactory low. If this market makes another leg down, I won't be surprised at all. We don't expect markets to be turning permanently at the 50%, which is what this market's done at its low, and is now battling away at that 50% rally up there. So let's see what that tells us. So this is the S&P on the 6-day cycle. I've been talking over the last 2 or 3 months a whole lot about time cycles, and I'm not going to talk about them for a while, other than to just show you that on the 6-day cycles, on the 6-day chart, we got almost all of the significant cycles, and there's a few coming up. You can see the arrows into empty space are where those 6-day cycles will be expiring. And I'll give you the absolute dates for those, not in the not too distant future. Okay, so while I was talking to these guys from Tech Invest, it was clear to me that they had absolutely no understanding of the Danielcode. And even after they'd become members and had a look through the website and what have you, they still had no real understanding of how these Danielcode ratios are created. So there are Danielcode, there are time and price ratios that we create. They're a simple mathematical derivation of the numbers and sequences in Daniel's code, which itself is an historic document. Now, because it's a historic document, we've got to be very careful that we're not running off on a mad wild goose chase somewhere. So we take those calculations and we test them against known modern day time cycles for verification. If they're valid, they should be verifiable against what we scientifically know are the major and the minor time cycles, and they are, and it's amazing just how accurate they are. For example, one of the numbers, the obvious numbers that comes out of creating the Danielcode ratios is 365.27 days, which is a calendar year. Well, not quite, but it's accurate to within 2 hours over a whole calendar year. And when you consider that this document was written over 2,000 years ago, it's pretty stunning stuff. And a couple of thoughts for you to have in your head. Nobody knows what the future will bring, not even me. I know at times it seems I may, but trading is based on probabilities. There are no certainties, although some of the probabilities can be very high indeed. And target recognition, that key phrase, occurs when we get a market finding a Danielcode number within 0.1%, not 1%, 1/10 of 1%, 0.1%. And I know it sounds extraordinary, but it's happening all the time, every day. And as we're going to see, even when we have a relatively lazy day like today's trading, that target recognition is so specific. We know that happens when we get a daily bar or a longer term chart. This worked on all time frames, and we get target recognition at a high or low or the close within that allowable variable. And these ratios look like support and resistance, and they do act that way, but they are much more as target recognition. Very specific. Target recognition is finding that target within 0.1%. And it's true that when we start off our charts after a turn, the retracements, the Danielcode numbers are relatively few. There'd be 6 in total on a big swing. But as that move moves on, every swing creates its own new Danielcode numbers, and we can finish up in some cases with a whole lot of lines on the chart. And as Giga said, someone will say that if you put enough numbers on the chart, it's sure to find one of them. That's not the point. The point is, what we're interested in is what markets do at those numbers, how they react at those numbers. And they can ignore them and go straight through, or they can react to them. And to react to them, to have their high or their low or their close at 0.1% or less. Sometimes it's a matter of 1 or 2 ticks, or none, 0 in fact, and that happens all the time. And markets can ignore parts of that Danielcode sequence, but that target recognition is valid for 2 and sometimes 3 days. So it's not the DC numbers so much that influences, but what markets do in recognition of those numbers. That's the whole shebang. And the Danielcode retracement tool, the Danielcode time cycles, they're available to all of you who are subscribed to the Danielcode website Pro subscribers package. And what I'm going to do today is I'm going to show you a very, very detailed analysis of an old gold chart, and I'm going to use only those 2 tools. I'm going to use the Danielcode retracement tool, and I'm going to use the Danielcode time cycle tool, and you'll be amazed at what you're going to see. So this is COMEX Gold from May 2015 through to December. It's actually going to be May, June, July, August, September, October, November, December 2015. And this is a chart. If you've done a tutorial, you've seen this chart. I use this chart when I'm teaching Danielcode time and price cycles, particularly price cycles. And I use this piece of chart in particular because it's dreadful. It's got almost all the things that shock you. It's got fake outs, it's got trend turns without signals, it's got nasty consolidation down near the bottom to wipe everyone out. It's got some real exciting volatility after the October 15 high. It's got all the bad things that are going to blow your mind. I'm going to show you just how incredibly logical these markets are, and all markets are the same. I can do this analysis for you on any market you can think of, for any dates you can think of, and you'll be absolutely amazed how reliable they are. So talking to these guys from Tech Invest, they're talking about some pretty big corporations who are dedicated to creating studies, and they wanted to know from me what I thought were the most worthwhile studies. Well, I don't think any studies are really terribly worthwhile, except for the numbers that the Danielcode creates itself. I do use a 5-day stochastic. Why is it a 5-day? Well, the WD Gann, the great Gann, used to say, if you are worthy, I will tell you the number. And if you are worthy, which meant buying a whole lot of his product, he'd tell you the number was 7, which is not. The number is in fact 6. To be detailed, it's 6.21. It's the vibration for all markets. And it's one of the reasons why GAN folks struggle so much, that if you can't get the basic time cycle right, you're going to be scratching around a bit. But put on anything you like. I've got an RSI on here, I've got a MACD, I've got a stochastic, I've got a proprietary momentum indicator. None of them, all of them are good, and none of them are accurate. That's the reality of it. And if you're using those tools for your trading, good luck to you. You're a very brave person. You don't need any of them. What you really need is Danielcode target recognition. You may want a soft stochastic to just guide you about what the direction is if it's not obvious to you. But have a look what we can do without any studies whatsoever, simply the Danielcode tool. So what we've done here, this is the first correction. We've got a major high in July 2015, and it's created after it's the culmination of 2 separate swings. The first one I put on the chart, and I put on some of the Danielcode retracement tools. We can move on from there and see you've got the second, the ultimate high up there at May 2015, and that's the second swing that creates the Danielcode numbers. So where do these numbers come from? Well, what I've created, what's been revealed to me, are the percentages, just using some simple mathematics. The percentages don't change, but they're percentages of various ranges. So the market is creating these numbers itself. It's the highs and the lows that are creating these Danielcode ratios. And it all looks pretty simple there, but it's deadly. Have a look. What you've actually found, I've put on just the first 2 swings there, 2 major swings, very obvious what they are. And what we found against the Danielcode numbers that I've left on there, and I've taken off the ones that are not relevant so it doesn't clutter up the chart. And you can see clearly that these ratios, they act like a very big gun. Markets hit these numbers and they stop like they're shot. And as you can see, at our second level up, the middle of the 3 highs that we're looking at there, that's a really big volatility bar going into that high. Look at the next one, the big volatility bar, 1 bar before the ultimate high. Look at the first high. There's a reasonably sized bar at the high, but the bars before it, both of them, are high momentum bars. Most people don't believe that markets will turn after high momentum bars. I'm going to prove to you exactly the opposite. That these Danielcode numbers and ratios are so powerful. When you get target recognition, specifically, again, to bore you, the high or the close must be within 0.1% of the number of wherever the market is at the time. So if we have a look at gold here, it's trading in the $1,100 to $1,200 range. 0.1% of that is 1.1 or 1.2 points. And there are 10 ticks to the point in gold. So we're talking about 11 or 12 ticks is the maximum allowable variance. Now have a look along the bottom of this chart and you can see 2 little triangles. They've got the letter R in them, a capital R. That's for rollover. These are the various futures contracts rolling over and then the new contract coming on. Now this is not back adjusted. This is a Trade Navigator 057 chart, which simply takes the front month and slaps it on the chart, and the difference between, often there's either a premium or a discount on rollover. It's not addressed at all. It's simply the real numbers of the front month. What makes a contract the front month? That's volume. When the volume moves from one month into the next month, the near month usually, but sometimes it's not the near month, sometimes we'll skip a couple of months, then that is just slapped into this chart. Just live with it. It should create a constant error, a significant error, and you'd be amazed how the market overcomes that. So there are the three highs that we get after the July 24th low, and we can see that all of them, those three at least, they have all created target recognition within that allowable variable. What's the actual variance? It's about 6 or 7, or in one case 8 ticks. That's all it is, and that's quite literal. So, and move on there. Now what I've done is I put on the downside ratios now from the respective highs down to their swing lows. And again, you get target recognition at 1097.5. That's about a 2-tick variance, and you get target recognition in a little more complex way on the next low. You've got big bars coming down. 2 of them had a huge bar up into the close to create the signal, to create target recognition. Little inside bar, then a big bar down, an ordinary bar, and another big bar. And then you get this tiny little bar. And there's a very specific reason for that. Why would that happen? It happens for one reason only, because the close of that bar is only 3 or 4 ticks away from the Danielcode red line at 1112.90, and that's what gives you target recognition. So you've got your buy signal for the next bar, and that next 4 days gives you about $2,400 straight into your account very nicely. Okay, so those are the time ratios, and you can see this market has been completely controlled by those time ratios. We're now going to have a look at price ratios, I should say, but the price ratios are created from our time ratios. They're the same thing. From the Daniel's source code, we get this matrix of numbers using simple mathematics, which, as I say, we verify against modern numbers to know that they have some real meaning. And then we use those ratios for time, and we use exactly the same ratios for price. We've just taken the percentages. You can see, looking at this chart, which is for the first one that's got the time cycles on it, 44, 59, 62, and 70. Those are the most common Danielcode time cycles. And we use exactly the same of those except the 70. We don't use the 70 when we're running price cycles, but we use all of the other Danielcode numbers. 70 is a particularly interesting number. It comes from a different part of the source code, but it is valid, and you'll often see 70 cycle anything that relates to Europe for some reason. Any forex pairs that have the euro in it, bunds, all of that, those sorts of securities, love working on 70 cycles. And that's very interesting. So what you can see here is we've just simply taken a bar which I've described as being a high before the high. That's a very common way of starting time cycles, as indeed is the price, is the high after the high. But for time, high before the high and the high after the high are very, very important, and major highs and lows are important. So don't get too flustered about any of this. It's just the same tool, and we're just repeating it again and again. So right here, from that high before the high that I've marked for you, you got some various vibrations and cycles. The one that actually we're interested in here is a 62 cycle, which gave us that very complex low in July 2015. Let's keep doing that, what we're doing. We've now moved on, and we've started our time cycle now on the minor high before the high. That'd be the May 18th, 2015 high. This is a high before the high. Look what the ratios give you. 70 gives you the first reactive high, which itself found Danielcode price targets. So it's using Danielcode time and Danielcode price. At that stage, we say time and price are squared. which is an expression I borrowed from W.D. Gann. Why am I entitled to borrow something from W.D. Gann? Well, I was a Gann fan for 10 or 12 years. I spent a significant part of my life invested in Gann and thinking it was the bee's knees until I found out some other material as well. But it would be crass of me not to say how much I enjoyed wading through the murk that surrounds all of this Gann stuff. But it was great experience and great learning. But what we've got here is we've got a price target that's been found, DC target recognition within 0.1%, and as well as that, we've got a known Danielcode time cycle. And what we say is that when time and price are squared, which is not used the way Gann used to use it to mean they're both on the same angle. What I mean by that is we have price at a known price level on the Danielcode numbers tracement tool, and price is at a known Danielcode time, I should say, is also at a known Danielcode time cycle. And we say that when time and price are squared, a turn is almost inevitable. And there was our second lot of time cycles. Let's move on. Here's the third. You can see we've now reverted from a high before the high. We're now running from a low before the low. And that gives us a 59 minor cycle at the inside bar before the penultimate rally. The 62 gives us the high of that rally. 59 to 62 to find that little rally. And then, of course, the 70 gives you the low, which I've marked as target recognition as well. Again, time and price are squared at that point. So here is, we got that. This is now moved on. This is the new same 70 cycle. We're now running this from a major high. This is a complex high. It has many, many bars either side of it. That makes it a complex high or a major high, which is important. Now what have you got? You've got the 70 cycle again defining the rally up, and they've got the blue dot on them, and it says moonbeam. So what are moonbeams? Well, strictly speaking, if I was to draw a Danielcode fourth seal angle, angles have qualities of both time and price, it would intersect exactly at those highs and lows. So when we get that, time and price are squared. We have price at a known Danielcode ratio. We have time at a known Danielcode ratio. A turn becomes almost inevitable, and I call them moonbeams because they're rare and they're very, very pretty. So you can see that's what that designates. That's my own private world of joy from trading. We move on. Look at this. It's just doing exactly the same thing. Now we're starting our time count from a major low. And what do we get? Well, the 44 finds the old high that we've already gotten traded. And now you can see the 59 cycle is giving you the high on October the 15th, 2015, which itself has target recognition in price, as does the previous bar. And that means time and price are squared. A turn is almost inevitable. It's amazing stuff, isn't it, folks? Now, you'll think there's a lot of these numbers. There's not so much, really. Just have a look at this. What I've done here is created something for you. Yeah, we've got a couple of other moonbeams there that I've just popped on to show you how this market just keeps reacting to these ratios. Excuse me. Have we moved on, or are we on the same one? I think we're still on the same chart. I think I've been putting the moonbeams on at the lows to show you that. That's what this is. You can see this one going from that low before the low again. It gives you the 70 cycle high, where I've said moonbeam with that low is about 2 ticks away from the 10975. I think of memory it might be 10972. But just a handful of ticks, less than a handful of ticks. So we've now got these moonbeams icons now on all of the highs, all of the lows that are tradable, and they've all come from here. So this is the final one of them. We're now running this off another low before the low. See what it is there? It's a low that comes before the low. And now from that cycle there, what are we getting? Well, the 62 has picked up that low that gave us the big outside bar reversal and $2,600 in the next few days. But the 70, again, it's picked out the high, and there are literally two highs there. We have target recognition on that bar, and we also have target recognition on the price cycles. And the very next bar, we get target recognition again. Quite extraordinary how close the variance is. It's never more than 8 ticks in this whole chart from Danielcode numbers, where, as I said, we're allowing either 11 or 12 ticks. It's quite extraordinary stuff. Okay, so market memory. Start thinking about this. All the Danielcode ratios know are the percentages. That's how Danielcode time is expressed. But to be able to know this final number, I'll put a spotlight on this so you can see exactly what I'm talking about. Here we are. This is this high up here. This is October the 15th, 2015. Think about this. This chart right there, it's actually got two lots of numbers. One of them is a bit obscured, but I can bring it back for you. One of those numbers is 1191.0. The other is 1190 point something else. Let me just go back where I was and see if I can find that. No, they're both off the chart. They'll come back later. Let me just keep going. I'll just accept that it's a handful of ticks away. So one of the things you'll see is these Danielcode numbers overlap each other. At this high that we're now talking about, here we are, we've got 1191 and 1190.7. 3 ticks variance, one on top of the other. Why is that? Well, if you look further down, you get much the same thing when you get 1171.2 and 1172.1, 9 ticks variance. They're just on top of each other. That happens often because all market moves are fractals of previous ranges, and they're related. As you can see, they're related. Everything on this chart is saying these are all related to the two important highs and the important low. That's what's created everything. And how long has it been? To find those numbers, the 1191 and the 1190.7, that's 107 trading days, or 150 calendar days, if you like, from that first big high on May the 18th. And to calculate those numbers, you have to know what was that high, what was the next high, and what was the low. And as I say, the high happened 107 days ago. The second high happened 85 days ago from the final high. The final high also happened 59 days, there's that number you should recognize, from the July low. So the market has to know those numbers and it has to remember them. Well, you and I couldn't remember them unless we'd written them down. But the market has a memory. It knows those numbers. It has to know those numbers. I give you the Danielcode ratios. They put these on a chart for me. You're going to say which high and which low. Where do I start? Where am I creating the range? And exactly the point I'm trying to make. Markets know those numbers and they remember them for at least 150 calendar days into the final high here. That shouldn't be, if you think about markets. You wouldn't think for a moment that markets be that precise because, we're talking about 1/10 of 1%. And the answer is they are that precise, and that's the amazing thing about it. So If you haven't already, folks, learn to trade the Danielcode. Do a Danielcode tutorial. We've split it up into 2 sections now. If it makes life easier for you, you can do the price tutorial for $4,500 and the time trading tutorial for the same amount. And you can take your time about which one you do first and which one you go on to. Or if you can, do the full tutorial. Learn everything that I show you on these tutorials. Everything I know, I will teach you. I had an interesting conversation with a client saying, why I said he's thinking of doing a tutorial, what happens after you're gone? And I thought, well, I don't want to even contemplate that, but there's a couple of answers. The first answer is my son John works in the business with me. He's a very smart young lad. He's got 2 university degrees, and he will follow on, carry on my work. But that's not the real answer. The real answer is once you've done a Danielcode tutorial, you won't need me. Once you've done it long enough and we've gone through the whole stage of paper trading and then real life trading, then answering questions, everything that you need, you won't need me. You'll be able to create almost all of the Danielcode ratios. You'll certainly be able to create all the ones that matter, and you will have access from your own work to all of that knowledge. So this is the point. Use any trading system that interests you. I don't care, even if you're doing Elliott Wave, God bless you. If you are, it's more painful than ingrown toenails, I can tell you. Whatever system you're using, add the Danielcode targets and find Danielcode target recognition, because markets turn at and only at Danielcode target recognition. And if you like, go to the chart archives tab of the Danielcode website. There are over 40,000 individual members charts that I've created for you since late 2007, and you will be hard pressed to find a market that's ever turned anywhere except upon receiving Danielcode target recognition. It's that powerful, folks. It's everything. It's everything. And have a look at this stuff. This is today. This was taken a few hours before, maybe an hour before the close, so the close itself may not be that accurate. Have a look what happened today. I mean, today was a dreamy old day. Half the traders have taken off already. This is T-bonds. Have a look at the high. 134 correct 14. That little arrowhead is called correct. 134 correct 14. Look at the high there, sitting there smiling at you at 134 correct 14. Got that? 0 target recognition. That was the high today. That's the Danielcode blue line on the members chart. 0 variance from target. This is the US dollar index. We had a buy signal for it today. What it did is it gave you target recognition on the last of those down bars, which was Tuesday. Then it did a key reversal bar. Look where the low of that key reversal bar. The low of that is 101.09, 101.090. Have a look at the Danielcode blue line, 101.080. 2 ticks variance. 2. That's all. Keep at it. I'm going to drive you mad over this. This is everything that we traded today. Here's the S&P E-mini. Look where its high came. It actually had a blue line trade the day before that high. But look at that high, the key reversal high on Tuesday. That high is 4171.75. Where's the 4171.75? Where's the Danielcode number for it? 4173. And this market here is 4 ticks to the point. 8 ticks variance. 8 ticks variance. We'd allow 0.1% is 16.5 ticks. We're getting it at 7 or 8 ticks. Half the allowable variance. Here's our next friend. This is Germany's DAX. We had a TO3 and blue line signal set up on Friday. So then you got an inside bar. What happened the next day? Remember, TO3 signals are valid for 2 days, including the day they're posted. Blue line signals are valid for 3 days, including the day of posting. Look at that high bar there on Tuesday. The high of that bar, 15,891. What was the Danielcode number? 15,893.5. Nothing. That's not even the thickness of a human hair. It's perfect target recognition, as was the bar on Friday last week, which set up the blue line signal. That high was 15,817. Where's our number? 15,811. 6 ticks variance. 1% of this number, because it's a huge number, is 15 points, and we're getting it within 6 ticks. Extraordinary stuff. Happens all the time. There's nothing surprising about this. You should expect this because it's what happens all the time. Next market's the Russell. Incidentally, those of you trading equities, I've been telling you for a while that the Russell has been the best of the equities for trade, and it has been nice. We had a nice run up. Got it all now. We're short, and on Wednesday, we had a low of 1752.7. Look where the low was today, 1753.7. Look where the red line is, 1753.6. 1 tick variance. Amazing. And the day before, 1 point variance. Well within our target recognition. This is what markets do. They are hitting these Danielcode numbers all the time. The markets go up to resistance and down to support. And those numbers are the Danielcode numbers. This is soybeans, which has been a pretty nice trade. We've got almost all of that big run up. And on Monday, we had a TO3 sell signal, little inside bar. Next day, close into the gap, and trade elected today. Where was the high of that setup bar? Well, Monday's high was 1527.6. Wednesday's high was 1527.0. What's the blue line number? 1526.6. 0 or a few ticks variance, that's it. Keep going. This is sugar. Wonderful trade in sugar. Have a look at it. This is just the members' charts. I haven't updated them. So the red lines are inaccurate now, but you can put those on yourselves if you have the Danielcode tool for that. And Alan, is my mouse pointer on? Yes, it is. I'm sorry if you can't see it. It's quite clear to me. May not be to you. Yep, there it is. Okay, so have a look at this wonderful trade. We've been long this all the way from the low. And I think before today's bar, we were up about, I'll see if I can find it, sugar, we were up about $2,200. Now, this is a market that has a margin of only 1,000, and we've had another huge bar today. But just see how this market works. If you look at this closely, on Wednesday, I should say, the close of that bar on Wednesday was 22.95. Where's our Danielcode blue line? 22.96, 1 tick variance. What about the high? The high was 23.01. Where's the other blue line? 23.0, 1 tick variance. What about today? Well, today we had another big bar up. Where's the close today? 23.61. Where's your Danielcode number? 23.63, 2 ticks variance. What about the high of this bar? The high of this bar, 23.68 today. What's the Danielcode blue line? The other one, 23.68. 0 variance. Perfect. How often does that happen? All the time. All the time. Is there a difference in the accuracy of these markets? A little bit. Silver is notorious for requiring it will run almost perfectly to 0.2%. It's the main outlier. The rest of them, 0.1% or less. And we're talking here about 1 or 2 ticks variance, 5 or 6 ticks variance. It's nothing. It's not even a human hair. and it just keeps doing it again and again and again. In fact, I'm showing you every futures chart except copper, which is waffling around a bit, but every single futures chart I'm showing you here. We've now moved on to silver, having just been talking about it. Have a look at that big up bar that sets up a TO3 and blue line sell signal. The close of that bar is 2510, 2510. Where's the blue line? 2509.5, one tick variance. What about today? Well, today the market's closed. Remember, target recognition is valid at a bar high low or the close. The close today, 2509.5. The blue line to the left of that bar, 2509.5. Zero variance, and this is probably the least accurate of all of our markets. It often enough requires 0.2%. Today and this week, zero variance, zero tolerance. Happens all the time. If you're not getting these numbers, folks, you are missing out on the most important tool in trading, bar none. This is onto Forex for you Forex guys. Does it work in Forex? It all works exactly the same on the Danielcode. No difference at all. This is the Aussie US dollar. It had a sell signal right at its high, a TO3 plus sell signal. What about the setup bar? Well, on Monday the high was 67.90. Where's the blue line? 67.92. Next, there's a key reversal bar. You needed the signal from the day before, but as a matter of interest, the high of that key reversal bar, 67.94, two ticked variance. Just goes on and on. Have a look at the close today in this market, 66.72. Where's the number? 66.73. In the red line, one tick variance. CAD Chief, here we are, big sell signal off the top. What happened there? Well, have a look at that high on Monday. The close of that bar was 67.93. Have a look at the red line there, 67.97, and the black line underneath it, 67.94. One tick variance. The interesting thing about the Danielcode black line, it works a bit differently to other bars. It does exactly the same thing, but in addition, if we got a close above the black line, it would move the probabilities massively in favor of assuming that the high would be taken out. Doesn't matter so much on daily charts because the high is not that far away. But I said the same thing to you on gold when it was making its breakthrough rally a couple of years ago, and that trade on its own, I said just in one of our webinars, if you get a daily close above that black line, it's going to take out the swing high with a 92% probability, and it did, and that trade was worth about 28,000 for one contract. So it's knowledge worth having. All of this stuff is knowledge. Okay, I think we've shown you that beautiful thing there, and now we have oh, here we are. This is cable. British pound, US dollar. I know a lot of you trade that. Have a look at this. This was Tuesday's bar, which set up the TO3 sell signal. And why did it do that? The close of that bar was 1.2501. What's the blue line? 1.2501. Zero variance. Can't get better than that. Happens all the time. Now, I'm not showing you the biggest bars. Danielcode is entirely mute on quantum. What it does, it'll follow the numbers down. What I'm trying to show you is that if you have access to these Danielcode numbers, however you trade, if you use these to filter your final filter, the last thing you see before you put the order on, do I have target recognition today or yesterday? That's the question. And sometimes 3 days, the blue line signal. But you don't have to worry yourself about that. If you have target recognition, you have the probability of a turn. If you do not have target recognition, it is highly improbable that you'll get a turn. And as I've said, go and check out our chart archives. There are over 70,000 members' charts there, all of which I've created, and you will be hard-pressed to find a market that has turned anywhere except on or after target recognition. It is a phenomenon. It's unknown to the world. These guys that I was talking to, I was telling you about, they're partners with NinjaTrader, and they do a bit of consulting for MT4. And they tell me that NinjaTrader has 800,000 active accounts. I mean, this is a big business. MT4 has 2 million active accounts, huge business. And they've never heard of this. They've never heard of the Danielcode at all. They don't understand. They've had a lifetime of programming charts and markets. They don't understand how it's possible for anything to be so accurate. And they didn't believe it, quite frankly. And I've had to, send the material. And I think actually one of them's here with us today. So I hope you're enjoying all of that, Corey. Okay, this is the New Zealand dollar. And how about this? How about this for a massive rally up bar on Wednesday? It's a big, big bar. Huge momentum. Plenty of passion about it. Where's it going to go? Well, the high, 63.80. What's the Danielcode blue line? Excuse me, 63.81. One tick variance, stopped it like it's shot. Created a TO3 sell signal on a big momentum bar. What happened today? Down it goes. Wonderful stuff. Love it. Problem is, I didn't change the chart for you. Now I have, and now you can see it. Big, big bar, big momentum bar, roared up, going to the moon. Hit the Danielcode number, 63.81. One tick variance at the high, one. Stopped it like it was shot, down it goes, creates a TO3 sell signal, which I posted for you. Market's down today. Takes out the low at where the trade gets elected, and off it goes. I think we're probably showing you more and more of this stuff. What's this one? This is the dollar CAD. This is the loonie US CAD. The signal there is created, as you can see from the arrows, on the penultimate down bar, which was Monday, and the close of that bar is 1.3437. The red line, 1.3435. And the very next day, of course, that bar set up the TO3 plus buy signal for the next day, and we've had a little rally from there. This is dollar yen, and I think this is getting near the end of the charts I wanted to hit you with these. I wanted to drive you mad looking at these things because it is so phenomenal and people just don't understand it. And from a practical point of view, if you don't have Danielcode target recognition, you are very highly unlikely to get a turn. It's that simple. This target recognition came on Friday of last week. The high of that bar, 133,594. Where was the number? 133,569. Like nothing. TO3 sell signal, down it went, and another 2 days down as well. Little rally today, but a nice trade, good to have. All of it comes from the same thing. And of course, here's our old friend, crude oil, that got so dramatic today with the OPEC plus, which is the Saudis plus Russia, basically, deciding that they were going to cut pumping oil. Look at this big price gap. But there's nothing new about this. If you look at this chart from the beginning, there's a TO3 blue line buy signal all the way back from March the 17th. That's when the turn starts getting ready to turn. And how does that happen? The low of that bar is 65.38. The Danielcode number there, the black line, 65.40, 2 ticks variance. Okay, that sets up the turn, TO3 blue line buy signal. Next day, key reversal bar, 1, 2, 3 days up, 1 bar counter trend on the TO3 sell. Exit that anywhere you can because it's against the apparent trend. Then you get a flip me long. Those of you who follow our webinars know what I'm talking about. You get long again on Monday, March the 27th, and then that gives you a nice little bit of a run up, and then bang, you get the gap with all the excitement and drama just to take out the swing high. And that last little bit of trading, $5,500, $5,300 into today, when it stopped out the inside bar. So I hope that you've seen this stuff. I hope you've burnt it into your memory. I hope you understand that this is the indispensable tool. If you don't already have access to it, take your Danielcode free trial, look at members charts. All of these charts are up there for you. And the ones that we don't have members charts for, I follow them and I calculate the signals for you. Again, those of you who are capable, learn to trade the Danielcode. I will teach you this stuff. I will teach you everything that you've seen me do at all of these webinars. I will make you a master trader. Email me for further details, jneedham@thedanielcode.com, jneedham@thedanielcode.com. Remember, the business of trading futures and Forex is not to be right. The business of trading is making money. And if you have access to the Danielcode time and price signals, particularly in members charts, you will be making the money, because you're not going to get a turn. Very unlikely, very low probability you will ever get a turn in a market other than as a result of Danielcode target recognition. And I hope I've been able to prove that to you today, folks. I've shown you all of our futures charts except for copper, and I've shown you a pretty fair sampling of our Forex charts as well. All markets trade the same on the Danielcode, but access to those numbers and target recognition is the preemptive condition before you get a turn. Whatever system you're using, doesn't matter you're using our own TO3, TO3 plus signals, or 6S or anything else at the Danielcode, or you're trading an entirely different system, or you may have invented your own system. Add target recognition and that will turbocharge your returns, I promise you. If you haven't already, please feel free to take your free trial, folks. Go to the Danielcode website, www.thedanielcode.com. Any problems, contact Terry at support@thedanielcode.com, and he will get you squared away. This is our disclaimer, which we show you at every webinar. Please take it seriously. It is very easy to lose money if you don't know what you're doing, and most people don't. It's equally very easy to make a whole lot of money once you do know what you're doing, particularly with the Danielcode price and time ratios. And if you don't like mathematics, don't worry about it. You don't need to know anything about math. I do it all for you. Pretty simple. If you can just read numbers, you can trade exactly the way I'm showing you. And that's us for today, folks. We've got a couple of questions. Alan, yes, my partner was on. I hope you got to see it. Akshay, why isn't the 89 ratio used as a time cycle? It is, Akshay. It's just one of the lesser probabilities. It doesn't show up so often in time. It's very, very important in price because that's the famous Danielcode black line, of course. It's very worthwhile stuff. Well, that's it for me today, folks. Have a wonderful, happy Easter. Be safe, be careful, enjoy yourself, enjoy your family. And if you know anyone who's interested in futures market or the simple business of making money, share what you've seen today with them. I'd be most happy to see you do that. A whole lot of people came in a bit later today, and Trevor, of course. Oh Lord, there's a lot of you that come in. I haven't said hello to you, Miles. A whole lot of you. Do forgive me. Rajesh, sorry I haven't greeted you. There's a whole lot of them. Jim's, lots of Jim and Jen. A lot of people came in late. That's fine. Enjoy your holiday, folks. Terry will post the video of this webinar tomorrow. If you'd like to see it again, or for people who are traveling, they'll be able to catch up on the magic of the Danielcode. That's it for now, folks. Look forward to meeting you again at our next webinar in 2 weeks' time. Have a safe and wonderful break over the holiday weekend. Bye-bye for now.